So I do think the Australian dollar is in this major rally. We're about to break out the we're going to make a run at this trend line, but I'd definitely be bailing at that trend line for take profits, and I'd definitely be bailing on the previous known support that became the doji, that became the collapse. So this demo, I was just placing orders here, and this is actually a after the trade is filled and it's going through the phase you think it's going to go through, where they take it to the edge of unfair value. And this is another video I found called Auction Market Theory, and this is kind of this guy's about as angry as me, describing what's going on in the market. And I think the frustration that I think I share with this guy is that yes, I've done a lot of research in TradeStation. I've created a lot of indicators, and I must say that when you create an indicator, say, of a moving average, there's a rule set that goes with that. Whereas in auction theory, the rule set is that you're looking for the market to get to an extreme. So when you enter at the extreme, and here I could have got a better entry than I did even, and I could be in bigger, but I've doubled this account. I've more than doubled this account. I could take this account up to quadruple. I could make $30,000 in probably, if I stayed in here for 2 more months, say. This is the monthly dollar USD. Since the end of the month just came, and the end of the year just came, it's kind of a big deal now. I think we're going to still cut north. I think we're going to attempt that trend line, but this is way out, right? This is going to take, and I could just leave this, and I would leave this. I've done this before. I've come back to demos where you just stayed in the trade. Now I'm gonna fix the scale on here, and there's no stop or no take profit on this trade actually. So I don't know if you remember your first demo. I remember every demo. I remember every trade, sadly, but I really think that this auction entry here, which is buying the previous support, I could have got a better price though. You know, every trade could be better than it is. So on the weekends, I'm studying where I want to put my orders. Now, you're going to wait a long time to get filled here. But to buy that low, that's the entry. It's that simple. Now, if I go to the weekly, we've already broken the trend line, and we're already going into, in the other auction video, he describes this as, in other words, when you get to the fulcrum, which is fair value, right in the middle of the road here at this pivot, once you cross over, forget about it. And now it's it would go initiative, break out this thing. If this low fails here, there's a triple bottom on the weekly. Well, definitely taking profits here. So I will get out of this trade here. And if I wanted to reload now, I may never get my retest. In other words, you may not get the, and here's where you would decide, do I pull off one of these trades? Do I take, now this is where the big fork in the road is psychologically. Now, say you really were up $11,000 in 2 weeks on this trade, or wherever this got back in. I can't see. It would have been this wick, or it would have been it could have been anywhere from the beginning of the year. Now, if you just bought, and this is just how, I don't have there's no weekly or there's no yearly MetaTrader settings, so the only way to really replicate that is to zoom way out. At this point, you would have to look at this as your, another thing you're looking at is the, if you think that this pullback, and this is for anybody who's, just to explain in Elliott terms, because we all know when somebody plays the blues, like if somebody says they're an Elliott wave trader, you know they're playing jazz, right? If somebody says that they're trading volatility breakout, they're a blues player, right? They're trading the most basic kind of mechanical style that doesn't require any thinking other than, okay, small bar, hit this button. Now that button could literally be a complete symmetrical entry bank where in the next 4 hours, if the market should go up or down and follow through on that, that's a winning trade entry point. Now, once the market starts to move, Unfortunately, you cannot touch that trade or even go counter trend trade to that in a mechanical system until you wait 4 hours. If you're in a 4-hour swing, market goes down 12 hours, you're looking for a 4-hour retracement to make quite a high probability trade. In fact, as the market's coming down, you're really trying to catch a falling knife, but with, instead of one hand, which we was single position entry, you're going to catch a falling knife with 20 hands, and you can sacrifice 3 and still walk away and be able to, you know, function in normal life and not be wounded. I just saw this guy last night who was he got in this huge thing. His hand doesn't work, and I just don't get it. Like, I mean, he took himself there. He did it on purpose. I mean, like, almost like a suicide, right? You survive. Now, the one thing that I found really, the one thing I found really fascinating about these markets is, and I don't see, it stands out for me is the top inside the bottom. When the market does a sheer meltdown, and this is the monthly Australian dollar, that's this is so steep, and then if this is Elliott wave, this would be like a C correction, because C needs to be the correction in a bigger up move. But there's a ABC. C is supposed to be the biggest wave, but so I guess you'd have to say inside of here is a 1, 2, 3 or something. But that's the problem. It's like jazz, right? It doesn't matter where I start on the 1. That's what probably people have a problem with Elliott wave, because okay, where's 0? Where's 1? Oh, you started there, did you? Okay, I see what you're talking about now. Now in jazz music, you can get away with just experimenting. You can't do that too much in the market. If you start experimenting too much, you're going to start losing money on testing out ideas, and you really can't backtest those ideas, because you have to know, you have to see if it's a comfortable way to trade. That style's comfortable based on your risk threshold for pain, for dollar risk pain. Because if you are up on the trade and you're in kind of a medium-sized position, this is the hardest point. This is the doji of your decision. You're going to have to decide now. You're the doji. The market's trading sideways. Are we going to continue, or should I just dump? And they're just going to pull it back. The market goes sideways. A lot of people, that is the entry and exit door, the revolving door of the market. Do I go flat, reload with limits, or do I go flat, take everything I just made, now re-bracket the market on buy stops, sell stops, and just keep on adjusting the tightness of your entry based on the volatility on that bar? So really, here would have been so anyways, this big sell-off here, there's a top inside this bottom, and this is right here, the top inside the bottom. So your buy limits are here, right? This is a classic entry point. Double bottom there. Classic. Another time that happened, you're looking for like the bottom inside the top is the other entry. But you're just looking for a super clean ABC wave, or just the first zigzag. Now, everybody's going to sell here, because this was what's supposed to hold as the if you go back to what the bulls would have thought about this projection, right? It's going to keep climbing up this edge, and then you copy that line to the get it queued up on close, and now start to drag versions of it, and you'll see that that's a big rollover. Like this internal, this would be the middle tine on the pitchfork, and here's the edge of the pitchfork. So here is the pivot. It pulls back, very subtle, and so the center thread on that is the fulcrum's right here. So it's fair value. Once you go unfair, and we've been unfair for, if you consider everything below this is unfair value, And a lot of people would the scalper, if this was a smaller time frame, you got your buy limit start here. So you're going to buy for a retrace, you never get it. So the next place they take it is here. Now they've trapped below this support here. And it's not to say you can't go down here, retest this, right? Everybody's going to buy the bounce off of that. Of course, this is a monthly chart. And so, yeah, you can look like a genius here. You can post this thing and say, yeah, I'm up $11,000. And I just... Now, if you would have bought way bigger, and apparently I've got... I'm only using $400 a margin. Now, I think that's what's really it's about. If you're using $400 a margin and you're up 11,000, I'm looking at this. If my stops are set at where my margin's at, I'm going to get stopped out of this trade if we start get $1,000 loss. So you're up tenfold, right? If you had a $1,000 stop and each one of these tickets had separate stops, and maybe you spent the time to put in actually 300 tickets, right? Instead of you get, and so you put in micros of all this stuff. You have that's 100, right? It's quite a bit of work. But if you press the button and you're dropping a 50K spread across this, can you imagine? Hand placed orders that go all the way to here, you never got filled. This thing's going to retrace logically to here. Now, we just trapped these bulls on the monthly wicks. So this window is going to be crazy. You could go sideways now. Now you could go into pure, and everybody's going to buy in a pullback to this. It may actually overshoot that pullback. That's another possibility. But for the first time, you've got your very first higher bottom. You can draw a trend line. Now a lot of people will be bailing if it comes up into here for sure. This will be a revisit of that. This little baby zig is a doji, and so you're going to put a thread through that. You got a bottom. This is a big congestion flag breakdown. I could visualize this pulling back to here, but this is where I'm not going to sell here for a pullback. No. I'm either long or I would drop down. This is the weekly. You have to wait till dump it next week, right? Then you wait for the pullback. I would actually dump this next week. Maybe Wednesday it goes nuts and you get this swing swap spike. And it's funny, people talk about the swap. It's $1.20, right? I mean, if you're just scalping, swap don't matter. And I don't know, maybe that's a good price. Maybe I'm making interest on this thing, but I don't know that I don't want to go that far off into the rabbit hole of fundamentals, because in the end, I make the argument fundamentally. I can create an argument. Anyways, I'm not trying to. What I'm trying to say is, demo accounts, you can make mind-blowing amounts of money, fake money, and but it proves it's possible. With just a slight bit of margin. This is very high. I think this is 401, 501 margin on this broker. But so let me just do the. I put up a new template and I took off the Canadian dollar. This is the weekend update. Okay, I just kind of chopped that chart a little tight there. Let me just move this. Well, it's all right. I guess I'm missing the bottom of the screen here. Resize this puppy. Okay. All right, so this is the end of the week, and I wanted to do the old weekend update, I guess they call it. And crude oil's broken out, and crude's going to be everybody's want to get on the crude train. I think that's what's going to happen. And I think that inflation is going to finally rear its ugly head. Of course, I guess these central banks are all giddy about inflation, because I guess that proves that you've got a big hairy chest or something. I don't understand the whole logic there, but at least that's what the people say. There's people that speculate about what fundamentals are. There's speculation on fundamentals too. Don't forget, once you go down the fundamental rabbit hole, then you're really in big trouble. I think you're totally, and I don't know if these are the currency pairs people trade, and the weekly update is supposed to be, just the global view. And these are scalp entries, the ones that I picked out, and the Canadian dollar is still melting down. So I guess I'll just start randomly, like, I don't know. I'm not going to go through some strict list, I suppose. Still no buys on this thing, and this is getting critical now. You're starting to drip down into, and it's a drip trade. I don't like these trades. I wouldn't have jumped on the short train. I guess you could have got on the short train right here. Break of this trend line. Obvious, right? Now, I would copy that trend line and start marching that forward into space. You're looking for, and the ultimate confluence point is that, this is just like when the euro dollar pulled back this week. You're not getting, I'll stretch all these out. You're not getting this, it's too good to be true trade, right? We've all seen the too good to be true, and sometimes the too good to be true is a good trade. So there is a real mind trap there, but everybody's buying at this top, and they're getting killed right now. Tops become bottoms, but like I said, not in a market that's literally collapsing. And this market's way overbaked. Now, that 10 pip grid up here, so that's why it's so dense looking. But, this thing can move so hard. This market can just crush like a pile of, like, if you look at the perspective here, you may have another 2 weeks of finally it dies out here, and you could scalp it for a bounce. On the daily, it's still flying down, but you can't think daily. You have to think next week. And I'm buying on stops. If I was really going to trade this, I would start putting buy limits 20, 30, 40, 50, 60 pips that last like 2 hours, 4 hours, 8 hours. Just pepper this thing. It doesn't matter. You need to have a gallery of paintings. You can't have one Picasso in your gallery. This is the one position trading mentality. It is so ridiculous. So combine this with auction theory. The dollar CAD's going up, but this pullback has made more money in less time than this. Like, some of these moves up are just so choppy, and you're thinking, maybe I should just be a scalper. I am getting killed. On this one, for all the people that trade almost off the floor, seriously off the floor, you look at your charts every weekend. This is it. These entries here, it's how it goes, right? Best entries in the world, because there's not a lot of trades. You're never going to overtrade, and you could trade, if you only watch the things on the weekend, you could trade 22 currency pairs, right? But if you're scalping it all, like mentally in the frame mind of scalping all those orders for the weeklies you'd place on Sunday and walk away, set it, forget it. You cannot touch, I guess where the discipline comes in, you cannot touch those orders or even change those orders. You may add on, I suppose, as soon as you change one step, like this is what Mark Douglas said, you have to not change too many elements at once. You have to proceed along and keep doing the same script. When that script is stable, and you know the realm in which that script can be executed, say it's a breakout strategy, say it's a buy at the market with a tight stop, say it's a super deep pending that lasts a long time, you have to let all this stuff play out, because if you start saying, well, you know what, it looks like a good buy right now at the market, you start buying, and if you're say it doesn't have to be a lot of money, say you go into anger trade mode where you're like, damn, this, like right here, there are people that I'm sure, if this is a 5-minute chart, I'd be thinking, well, you know, I want to buy this thing, and they keep pulling it back. I mean, like, where do I get in? So a lot of people are long probably right now, and they're underwater. They bought this top. Now the next support level is this one. Your buy limit sitting here. You have not gotten filled yet. You have to be willing to take this amount of heat. I mean, if you're really bullish on this thing, and I'm just speaking in scalping terms, this one you might have already been stopped out on that top entry. So how tight are the stops on each trade you place? It's very, but it all becomes order inventory at that point. And certainly here, you're going to have a buy limit. And this wick, you're going to have and there's not a lot of trades here. So next week would look like this. You have buy limit here, and you have buy limit here, and you got a buy limit here. And you can give the reason. The reason is every zag gets an order, and every zig. So you can look back and you go, okay, this one you have to have at this valley. So that's your whole pile of orders for next week. This thing comes into this stuff. Now, if your stop is down here, and it would have to be, if you're trading the weekly, your stop is here. But maybe this is also, look at this perfect top become a bottom of the wick. Maybe they take it down there. Are they going to be able to take it down there by when? So you have to give this thing a time stamp. It's got to get there by then. If it doesn't, it's just going to go up, and they've done pulling it back. So what is the sweet spot? Well, I would drag this to current. Now we look for a logical place to say, can they punch this thing down into, this is the weekly, can they take that dollar CAD down into this stuff? I could see it happening. Now, the other kind of, and this would be one of these harmonic, oh, that was the thing they were wanting to sue me about, the word harmonic trading. And I guess you can't say that now or something. I noticed when I got this thing, Akel Stoltz, it just dawned on me, Akel Stoltz never used the phrase harmonic trading, so I guess I've already violated that patent just by even mentioning the thing. It's like, don't use the R word. I'm like, huh? You mean rate of change? So, anyways, yeah, this thing, I'm going to say harmonica pattern, right? This is how you fly under the radar, the sensors. Okay, the harmonica pattern, this is based on like a blues harp. Yeah, what's going on here is you can do that index trading. I've patented that one, so don't come after me. But this would be your only argument for an entry. Trend line breakout pulls back into here. I probably won't live long enough to see that entry, but this could happen. We could melt all the way back to here, my buy limit. Now, I don't have the patience for that trade, but this would be a structure entry. You see the double bottom became a top. That's a major pivot. You put an order there. But, you know, if you don't have the patience for this stuff, I mean, this thing's not done pulling back, I guess is what I'm trying to say. But these are the possible entry zones you're going to make confluence between the horizontal price and the angular price. And this is your miter box. This is your... you keep dragging these like a sextant, right? You're out to sea. It's floating currency. You're putting these guys in. You can fib these out, you know. You don't need a fib tool. If you want to put a logarithmic scale where there's more orders down here, you know. But you're thinking ahead. Forget it. It's still dripping wet. It's dying. Here is the crude oil trade. I'm just going to jump around. And this is about to break this trend line on the weekly. So we're breaking it right now, and I'm totally, if I was long, I'd be looking to take profits because, but if this is like the Australian dollar and people say they're correlated, I don't know if that's true or not. There's correlations always coming and going. Some of these markets sync up because there's a balance of money and there's too many people on one side of the ship. So this is the big bull, the big bear trap. This is when you see in the headlines the ridiculous comments, it's going to $10 a barrel. I'm like, yep, okay. Well, that may be looking like that here. In fact, the people that said it were probably right here, that $40 a barrel, and they're like, oh yeah, nice trap though. Certainly the wick trap. Now this auction trade here is, this is a classic. Buy limit here, they trap them. Slight uptrend, this is slightly higher on the weekly. Coming back to here, getting the hell out now. Totally go flat here. If it pauses and does a slight zigzag, maybe there's a chance to reboard the train. Everybody's got buy limits sitting at the previous breakout. So the guys that missed the train, they got their buy limits here. They can rejoin the party. And you could have this order too. But you have to have a lot of orders in. Buy limit there at the doji, right at the body of that doji. That's flat spot is the... I don't have candles on here, but you can imagine anytime you see a bend, this... confusion, doji. So crude looks like they might pop it to here. Everybody's going to bail at 40. Not a crude trader, but that's the story. Now, Here's another trap. Now this is the one where I wanted to buy a retest here and they blew me out. If I didn't have a wide enough exit. Now this is another. I saw a video. I did a Forex search and these guys were, and this is another one where people start projecting targets that aren't met. It's time to look the other way. This was the channel on the weekly. Copy, drag that over, cue it up to the channel you break out, becomes resistance. So we're coming up into resistance right now. We're coming up into this. Everybody's scalping, getting the hell out. All the scalpers, if this was a 50-minute chart, this is where they bail. I think this is going to go into auction mode where we went unfair. It's going to pause here, go doji, and then it's going to go and take out this. And the targets on this is going to be right up on this floor here. So we're going to go clear out these wicks, and here's the long range target is this flat spot doji, which coincides with this cluster of this, the contention with this area here, and this is the harmonica style of trading. This is a big serious. In fact, if you can get a this is the top inside the bottom launching pad was supposed to be. This is a big deal. This whole thing, big deal price. But you know, buy limits. Now buy limits have to be here. So the market's already given you the time to put buy limits there. We could retest. Yeah, you could get stopped out of that, but you know, the rules are rules, people. It worked over here, right? I bought, well, here you bought and they crushed you. This one you bought, and if you had a wide enough stop, your risk to reward ratio on that is pretty darn good, right? I mean, come on. Let me put my drawing guy here. Yeah, to me that was the entry. Like, say you bought here, just retest, and so it goes out, it traps these bears, and then it comes up here and actually traps the bulls for a little bit at the doji, and then but it rips. This is such a giant move off of that, and so people are bailing here. If we go sideways, then it's going to weasel its way past that trend line, and it'll be. It's an endless possibility once we get past a certain threshold, or we're going to go retest and even go lower. So if you go lower down, then it's. But right now, I would be covering. This is a scalp, a swing scalp exit. Right, getting the hell out right now. To me, it's. And what are you going to do there, right? You just made all those pips. If the follow through comes, it's going to have to probably stall out here for a while to get enough. It has to reject this because all the trend traders are getting in here. They're going to sell bottoms become tops in a downtrend. It's going down. But it's not going down forever. You go to the monthly. You've already trapped everybody below this. A lot of people are going to bail on the coming back to this bottom. So the depth on the bottom is the same. If you put an order, you see if you have an exit here, and then you go to the weekly, you're just coming up on your exit right here. So they could be getting out here, which is the pivot for the monthly. So yeah, British pound, you would have got clobbered had you bought this bottom. They blew you out. But you have the backup plan. You go flat, let them stop you out. The key is to put your order clusters in so that, say you have a bunch of buying in here and your stops here, you go flat, but your next order cluster's down here for no apparent reason other than every time you cut, you drop, you cut, you drop, you cut. Once you get picked up on the other side of that, if your ratios are set wide, even though you're taking hits here, stop out, stop out. When this thing turns around, you're making so much money. Now the only difficult part of that trade is to wait through the whole swing. So if you're still long here, you would have to wait, never dump that position and hold till here. But I don't know. I would probably just go flat and go to a smaller time frame, 4 hour, get in on a breakout there. A little bit like go you know, go take a break, come back. So if I go to the next, so that's the British pound, and but yeah, that thing certainly is out of control. There's no doubt that thing is just getting punished, and for whatever reason, wouldn't matter. The next one was Australia. Yeah, now this is a really much better auction style market because it's very choppy, and this is my most perfect setup. And the link I'm setting here of the video is really describing this kind of stuff, which just happens on a daily chart. This happens to be yeah, there's a daily chart, but this happens like on a 4-hour chart. Major trap there on the. It only looks like this on the weekly, but that's ridiculous, right? That is complete, utter. That wick is so the entry, and we're breaking this trend line right now. This trend line is pretty steep. If you go for 3 touches and close, the outside trend line, the target, at least for people that are going to bail, is going to be across that that triple top. So they're going to get out here, and the bullish scenario next week is, I guess you would, if you're long this thing, you could probably hold. There's probably a little bit of follow through coming that could take you up into this bottom here. Ideal exit is going to be the last known bottom that you blew out, which would conservatively be this pivot where this bottom becomes a top. So retested that, but the extended target's going to be that it slams all the way back up into that. So you're right, we're right at the junction of that playing out. And this other trend line here would be another kind of a greedy target, is to project off of, say, this, right? It's going to come. So your scenario right now for the next price pulse to finish out is going to be that it goes into a climax, either into this, which coincides with them trapping these people at the wick, and then for all the people that are still going to be bullish, they're going to, if you consider this to be fair value of this range, you're going to buy here on limits. That you may never get filled on that. So if they're probably going to, you know, it's probably going to be dumping out of that position up into here, and maybe they trap here on that wick and pull back. So, but this has quite the most violent reaction of all the currency pairs to, or the Australian to the yen. It seems to be the widest disagreement, and this thing moves a tremendous amount of pips. It's just mind-blowing. I mean, that's a 10-pip grid, so once you start to zoom into this, I mean, it's just that's an insane move. And if you're entering on this thing and your stops on that wick, you're at least, well, you're not quite double your money, but you're close to it. You could have entered here with it. You could have trailed your, after that wick completion, you could have tightened your stop up to here, and you would have totally, say you bought this with a stop here and a stop here and a stop here. It's a multitude of orders just on this whole strategy entry to buying unfair value back to fair. Fair is going to be, say here, then you could dilly-dally, then you could finally march north. But you can't think that far ahead, because you could get hit by a drone tomorrow. You know, anything could happen. You may not make it to the platform. So the next item up for bid is the New Zealand CAD. Wow, this thing. These traps don't get any better than this. This was totally the buy limit pivot. Your pending was been here. I don't know. I'm pretty sure I put this in the last video. If I didn't, this you could totally have traded this off of past history. Your buy limit's here, and your aggressive buy limit. Don't trade aggressively. What did I tell you about driving the car in the at 50 miles an hour on the side streets? But you can do that in the market. You can have your buy limits, aggressive entries. You got to trade aggressive. Come on. I mean, let's go there, right? Buy limit at this doji. Yeah, you were underwater for a while, but look where you're at now. You're a genius because your buy limit's at that doji. Doji rules. I'm sorry. You know, I used to think candles, you know, of course, to me that could be, there's a triangle inside of a doji body, but this stuff works, right? Clothesline to me, I just love closing line. Is it getting simpler than that? 4 hits. You think we're going to break that trend line? Oh, I think so. I think if you actually make the argument, you're breaking right now. But hell, people are taking profits there. Who's not? If you bought this top, the logical next step, it's chess. I guess because I play chess. This is a chess game. Of course, you can't intimidate the opponent. But if you move this move, you got a castle. You know, you got to do the other move. You got to get out here. Oh, I know you could have stayed in that trade, but you had to get out there. Just like if you were going to, and this is going down, your selling limits are here. You're taking some heat, but maybe you're selling this whole pocket area. You could probably make it to here now. It could fall away, and you could be the genius that sells at that pivot. But it's just pivot to pivot trading. It's move to move. There's only so many ranks and files. There's only so many ways that this thing could unfold. But I'm gonna trade 3 price pulse ahead. I can't step any further out in the universe than that. Everything changes. Like right now, we could get hit by a storm or something. So we're about to get this insane warm weather. And I'm going to hear these global warming people, and I'm just going to jump out the window again. But when you hear movie stars talking about... when I hear a movie star talking about Forex, I'm going to know we're really in trouble, right? This is what... Look how you can cue these trend lines up. It's just easy, man. In fact, I keep saying it all the time. I want to print out just closing prices. I think everybody should do that. Closing prices... What I really want to do, and this is an experiment I want to try, if anybody does, let me know the results. Take the closing price and strip off the price here. All this stuff. You can print it out. Just change this color to 0 or change it to the same matching background. Create a black and white chart. Closing prices only. Strip off the time, the X and Y axes, and just print it out and hand it to somebody and go, what is that? And just... people on the street, people you don't know, what does that look like to you? You Rorschach test these people, and then you take these things. You know. Why don't you draw some? Why don't you try to find some? Find a pattern in that. Right. Come back to me. Draw lines on that. Come back to me. It'd be so funny to see what people come back with, because they would think of stuff you wouldn't even think of, maybe. Or you'd be, oh, you know what? Here, I'd show you actually how to get in that trade. So the market's just nothing but data going up and down. It does have momentum. We definitely have broken this trend line, and the scalpers cleaned up on this trade. So I'm pretty sure if I didn't mention this in the last video, and I always say trade multiple tickets. You had a buy limit here to not get filled based upon this top. This is blockhead stuff. Now we're about to break this trend line, but I'm definitely, if I'm long, I'm getting out of this next week, taking profits. Step back, reassess, get out here. If it comes back up into here, yeah, maybe it's going to go to Tankolaville. But I'd rather make money in 2 weeks than wait 5 weeks, a month. I mean, sorry, don't have the patience. It's not going to happen. If they trap these bulls on that, and I get in here and I only make that, I'm only in that trade for 1 week to support, yeah, I want that one. If I'm getting in here, I already know these 2 bottoms exist. We're all buying there, but oof, major stop hunt correlates to this bottom. Now it would be, I'd already be out of that trade right there. Unfortunately for me, I would not hang through those next 3 weeks. I'm not that guy. Oh, of course, to me, this would be a 4-hour chart. I would never wait that long to get paid. I would jump maybe on the daily train to get the pullbacks within this thing. So inside here, just have to visualize there are pullbacks in there. Even on these, any monster move. So there's always shelves and cliffs and little, hooks we can get in on these other time frame. So look at the, so definitely New Zealand CAD, although this looks like, once again, dollar CAD, right? So the CAD is the one that's been pulling back. I don't want to try to overthink this. I just want to look at each individual. I don't want to think about, well, dollar can't compare this. You're just getting the hell out. Same thing against the, and that's a volatile pair. I'm just going to go, okay, so a dollar yen. So I did the dollar yen, right? I can't remember. Yeah, this is the top and side of the bottom, never filled. So dollar yen was, I think I actually put all this stuff up. Anyways, I'm going to do it again. So let me fix the scale here. So this has been a big scalping zone. I think I said in the other video, once you fall through this hole here, underneath these wicks and underneath that close, it's just going to be every scalper's dream. And there were the wick entries. So yeah, it'd take quite a bit of heat if you replace it. You never got filled on this buy limit. So that's the, I think I said, well, you know, if you're not getting filled on your buy limits, you're just going to have to, and here on the daily, you would have got in on all your buy limits would have just been anything from here to that wick would be just buy limits with whatever you can risk, right? I don't know what, I don't have my larger pip grid up there, but it's just a range. It's a range trader's dream like this. This looks like it's about to go up on the daily, but this is supposed to be a weekly thing. But here you would draw the trend line, at least on the daily, you can keep track of this stuff. Another one of these 4 touches, boom, it's going to go up. But we can still retest here on the daily. You got your buy limit on this pivot. It's that simple. It looks pretty like smooth on this weekly. There's a lot of drama in those wicks. And if you copy this top channel to this bottom and find a place, you could say, oh, it's going to come down there. Yeah, it's possible. And if you take this pivot, the rally, the take profit would be here. If you're long this thing, you definitely got to get out. And this is just a good old-fashioned chess trading. This double bottom here, you're going to bail here, because that's a good trade. You bought here, you got out here, and your stops were here. You made that much money. But if that's true, there'd probably another chance next week to get in when it comes back to fair value, which would be the middle of these wicks. To me, right? In fact, just right here is dead nuts on that bottom. You're now halfway. This would be halfway in this zone. For a ride to here, you can still maybe get in, but I'm certainly never going to be good at chasing these things. You could get a 20 pip pullback on this to get on the long train, or you can just sell here, and it's very choppy. It's gonna be choppy. So I think there's different phases here. Here is the British pound is lagging the retrace. In other words, the dollar already retraced, and the pound is going to follow through. It's the lagger that's going to play catch up. So if you're going to trade from follow the money's perspective, the euro to the yen is going to be the one you could get in now, because this guy's already taken off. This is also where I said buy this retest zone. So you have to have wide stops on these, but these are very high probability scalp bounces down here, and they've trapped these long-term bears. They're screwed. Now what's going to happen if this thing takes, the exit's got to be here. So if you're long this thing, I'd stay in here for the end of next week. And if you can wait, I wouldn't hold it over the weekend, but next week I'm bailing on this one too. I mean, ideally it smacks up into here, boom, you make a ton of pips, you risk the wick to make the retrace to here. You're out. All these trades were buy limits from the 2 weeks ago. I posted a video, buy limits, not stop entry. You couldn't really think stop entry on a weekly. You're either trading at the end of the week because you're like, well, I got a doji, I'm just going to buy. In fact, these doji entries or inverted hammers, You're just buying a small body. You're buying. You're just buying because it's just, the market's dead in the water. Low risk entry, tighter stops on a dead in the market water. The market when it's dead in the water, because if you try to jump on these things when they're screaming, man, you can get whipsawed. So the yen, and I guess I could organize these tiles better, but this is basically the yen across the board. Yen weekly, these 3 in a row. This was the first to get you double wick retest. This one is ahead of this one. Look at the retest on that wick. Now this is the argument for buy limits right at the wick. It seems like the most dumb trade is to buy a retest of that wick where they take it just a little bit lower. And people cannot believe that's happening. If you're on the daily, you're like, huh? Look at this. If your buy limit is here and you've got a wide enough stop on that, and you've got buy limits all the way to this wick, this whole wick zone, the previous wick limit, you could not put your stop at the edge of that. You have to be willing to buy more. Like I said in the other video, you have to be willing to. You are just like, I'm putting all these orders in. Now, as they're smashing that down, and that's the daily. You know, this is amazing, right? This is just head and shoulders city. And if you are only on this thing for the scalp of it all, you have buy limits here. Your stops, you can't just trade one order though. Because if you put your stop here to make this much, you're risking this much to make this much. You're too greedy, you put your stop in too tight. They bounced you out. If you have enough dry powder to put in buy limits all the way down, it's how you canvass the area, right? You don't go in the neighborhood and go up to people that are blind and sell them TV sets. You have to pick at least a neighborhood that has something correlated to what you're selling. And here's another prime example of, and although be it hindsight, you can have to anticipate some of this stuff and say, this is the shoulder, this is the head, this is the shoulder. When this is forming, at this point, at least for the scalp to here to get the easy money, man, when this thing goes back to fair value, stalls out, this becomes like, you know what, we're not going down again, people. This is not, we failed already here. We cut back through. Man, this thing's going to go totally ripping up. Monster trade there. Just simple. Zoomed in, blow by blow. He's looking right at it there. You're long. But you got to be taking profits of the doji. So I would have been already out of this trade on the daily. I'm totally flat. I'd be out. Target hit. Doji. Same thing on the dollar to the... but this is the thing. You're on the weekly. As soon as you drop down to the daily... once they started blowing through that and they grabbed this, they probably already trapped the bulls now. I'm going to pull back to here. Buy limits here, buy limits here. But if you're only doing weekly to dailies, you're also filtering out all your really garbage setups and garbage entries. If you're entering on the daily based on the weekly pendings, you're not going to be able to place that many orders. So you're going to make a lot of money. A trade like this. And when I saw that when the Australian dollar starts to come flying back, here it comes flying back against the CAD. So this, we've already broken this trend line. So CAD New Zealand, if you look at the CAD New Zealand, it's approaching. Australia is leading the pack. If you want to get in on the fact that that part of the world is appreciating on the Forex market, you got to get on the New Zealand train now. It's playing catch up, and at some point, Now, if you're trying to tighten up your window of entry because you're like, well, I want to get on that train, so I'm going to go to other currency that has not joined the pack yet. That would be the way to approach that. So you're going to drop down. Now it gets more complex if you're going to trade daily and weeklies, right? 22 pairs. Now you got to work at 44 charts, and it takes a little bit of. It can get disorganized real quick, so that may be too much. But and you can just run those 4 pairs. CAD to the New Zealand, Australia to the CAD, and just those 4 pairs. Everything against the CAD. I mean, it's bottomless pit of setups. But this thing is going nuts. Australia CAD totally blowing out this. This is where people were already taking profits on the weekly. So if you got out here, and you kind of had to, unfortunately, with the stuff, you have to take what's known to be high probability. This bottom is a target exit. So you're, unfortunately, if you took a whole position off here, then you're just sitting back and watching it leave without you. If you were in super heavy and you got out, you're like, oh. And I guess that's the argument for multiple currencies, is that if that trade's not working out, look for something to jump on. But he would have pre-assessed that you'd have to jump on the New Zealand train now to play catch up on the entry. It was about putting the buy limits at this doji. And that's one that I had set up for the entry in confluence with this trend line. So that was about as good as a setup will ever get in your life. If you saw that on a 1-hour chart or 4-hour chart, you would literally load the wagon. And if it ever came back to here, you'd still be prepared to buy limits here. Again, you have no choice. This thing is screaming. If you got out here, you still did damn good. If you're still holding a little bit, I would definitely be dumping next week up in here. But this is quite amazing. And this trend line has been broken and rebroken, and this thing is screaming, and your projections would be, for the most bullish projections, going to be off of this channel that, it's just going to go here, it's just going to take this side. And I think that's what's going to happen in the end, because this commodity sell-off, when you have markets go out of balance, go unfair value, when they rebalance, they come back to fair value. And it can be very boring. Consolidation's a boring lifestyle. So the ability to change your trading based on market dynamics is going to be like, even if you're a weekly and daily trader, when you see monthlies, I mean, you're kind of looking at, if you got the weekend to look at this stuff, you're looking at monthly, weekly, daily closing prices, print out all the charts, closing prices only. You have to clean everything down. When your hit songs that you hear out there from the old school, I mean, even any new hit song, it's very few elements. It's all about volume and dynamics. There's not much to it. There's only 12 notes. People are making a mint. This Taylor Swift, she's making a mint, doing the most simple stuff. High-end gear, of course, everybody has high-end gear, but she's using elements and properties and concepts from elements to create a landscape of sound, and people love it, right? I mean, I guess you call it kind of pop music. I wouldn't say it's some intricate jazz where you're like, wow, let me listen to that again. I think that's quite an emotional tangent. But, what are you going to do? If you want to, so the crowd, I guess this is why people are sign up for things that are mainstream, right? They want to belong to the core. Anyways, this thing, I would have already been out, and I'm going to get out some here, and wow, this thing's on a tear. And I'm not going to go to the monthly, but you can imagine the monthly. Oh, here, I will just wait. I just don't want to, get too scatterbrained, but the monthly, right? We already broke the trend line there. In other words, if you put a trend line on closing prices right here, right, you broke out, you pulled back, confirmed. It's even confirmation entering the monthly. So everything come together here like a perfect storm. Breakout, pullback, launch off this pad. And this thing's going to do some serious, you're going to see inflation, you're going to see, and this is supposedly what people want, is they want money rollover. So either the markets are too on fire or they're too quiet. So we're going to get, what do they call it, turn over the dollar, right? People money velocity. In other words, money velocity is inflation, and too much money velocity is hyperinflation. But it's about time, right? You can't take you can't take something to the edge. On the edges, it's unfair. It's going to become fair just by Mother Nature. Stuff cannot sit out of balance that long. It either blows up, or in an organic system, if you cut a tree, it heals. It's built into it. The markets are organic systems. They're basically crowd. You can say there's robots driving it, but those robots are designed by people. It's crowd behavior. I can write a script that trades good or bad. If I'm say I don't want to miss a move, I trade at the market and I have wide stops, and I'm afraid of getting stopped out, so I run wide stops, right? So that becomes my attempt to save myself from the pain of losing, becomes what makes me lose more. It's very backwards or counterintuitive. You're thinking, oh, you know what, I've seen these markets swing trades, so I will take a lot of heat on this trade, and it becomes the death of you. So that's never good. So the weekly New Zealand is the laggard. This was the other place to get in, was to buy this fair value zone here for the cut north, and we're about to, if I was in this, I would definitely be holding. So this was my other laggard entry that said would play catch up to the Australian. So you can follow money, you can see the stuff unfolding. This guy's going to come logically back to, and here's where we go into possibility that we're just going to cut through that hard. So definitely was still holding this for, my exit's got to be here, just logically right at the edge where they're going to try to trap the bulls. Because if it's really going up, look how many pullbacks in here, right? This is torture for anybody that can see down, or anybody speculating for this move. They are thinking, oh boy, I bought here and we are coming to here. But there's so many detours. There's so much accumulation that has to take place before finally. So if I could, of course, you've got to be a seller here. If it's really going up, it's probably going to come back to here. So this is the thing. You could have range traded this thing this whole time and made tons of money. Or you could have stubbornly held this and watch your equity swing all over the map. Move your order, move your stop to here, and just be like, oh my God, I've been in this trade for almost 6 months. Then finally it comes to here and you're like, oh boy. Now maybe you do have to retire on that trade because you spent so much time in the woodshed getting beaten with a wet noodle that, you can't hardly hang, right? You can't manage that psychologically. And so this is a brutal pair. This is a brutal volatility here, and this has been go to the monthly. This has been an amazing, since it's the end of the month. Look at this thing, holy mackerel! And what's going to happen next? It's astounding. Big trend line out here, giant monster. Never touched it, but we haven't tested that. Probably maybe test that. Copy that to the top of this channel. Wow. You have to say it's in an uptrend, I guess, in the long term. But a lot of craziness along the way, and everybody's going to be thinking about this as their exit was this last known low. So if you can hang through the next 3 months, I guess you got like the best price on this chart. No doubt. If you drew this trend line here, you can make the argument for 3 hits on that trend line. And you're really not breaking any rules of Right, you got and guess what? You know, got 3 hits on that. If you copy this trend line, this is going to be your new channel for your targets. Yeah, you gotta get out there. And the next exit for the super bullish, this bottom becomes a top here. So you get a harmonica confluence there. I didn't notice that. I think I heard this Akel-Stokes refer to the oh, you can't say that. And it's so funny because I guess the robot heard me say harmonic trading, and it even filtered out my anger about it. It was like, well, let this guy have his harmonicas. Jesus, you could say harmonic, but you can't say trading within the next millisecond. These robots are scaring me, man. All right, sorry to go tangential for the organized people out there that just want to hear just the facts, man. I don't want to hear about, I'm sorry, but could you just show me the next trade? Okay, like I said here, I'm getting out of everything I said to buy. What's the next thing up to bid? Okay, this one. I said sells up in here. Here's the trap. This was a no-brainer trade. All your sell limits are on the edge of these wicks, and they're on that doji, so you took some heat there. But we're all going to get out here. I would hold this until next week we hit this thing. If you really can hang for this amount of time for a pullback to this has got to be your target exit, just logically, right? So that was a kind of a scalp entry on the weekly. And look at that thing. You took some heat here, and you had to have your sell limits based on these zigzags here. So you got filled on that one. You wouldn't have got filled on this one necessarily. That's pretty close, but all of these things are telling you where the orders go. Here, you could come flying back to here. In fact, you could cut back. I'd definitely be getting the hell out right here. If I was short from that, I'm already out of the trade because look, it's just going to come off that bottom now. It's going to get choppy here coming in next week on this euro. There's a lot of scalping going on. We're right in the scalp zone, and as far as auction theory, you're coming back into fair value. Like, this is where you really left the station on it. And this would have been, plus the volatility breakout strategy, like it's just quiet, boom. Never came back, but we could come back to here for a possible entry. But if I'm short, I'm totally getting out of everything here. I just like to get out of everything. And I put a buy limit here because if they do come down to here and it becomes one of these, oh, it comes all the way back to here, just like you knew it, and then goes up. And that's about as far as I would speculate into the future on that, is that it comes to here, it goes there, or it just comes and just keeps marching north and just blows through that stuff. She got all week, all next week. I'm just getting, if I was short that thing, I'm covering right now. Next item up for bid is the, and this is kind of a choppy, and there's another auction entry here. It's just buying the, you never get the entry there, but buying at the edge of the market. It's all about getting in the edge. The dollar Swiss, which I said was going to roll over, I thought, you know, this is one of those kind of faint. This is not nearly as dramatic as the, and you typically get a mirror image between euro to dollar, dollar Swiss. Not a mirror image, but they really are kind of oppositely set. This would be your sell limits, and you took some heat here if you got in based upon just the horizontal prices, you're underwater. If you got in based on kind of a projection off of here, there's wicks here, that would have been your, let's stretch this thing out. You have to see the devil in the details here. But so in other words, if you had your sell limits on this pivot, you got filled. If your sell limits were based on a trend line off there, you almost nicked that. I think I said to sell here, but I didn't like it because it just was kind of, don't like this pair, it's drifty. I mean, it's just very quiet. And really it does like a jerky move. It doesn't get, I mean, you have to suffer like any trade. But this would be the, if that's it, if this is the bottom, That's becoming a top right now, and the first chance to get really short here. Yeah, we're going to break that trend line. Euro's going up. I'm going to start cleaning out all these wicks. And that could be it. The Swiss franc is just going to be where people park their money. In fact, I would love to just kick back and eat some good Swiss cheese. And, you know, people are getting older. I don't want to fight anymore. I don't want to try to drive in traffic with a bunch of crazy people like me. A bunch of impatient, angry traders. Here is the argument for you're just going to have to take profits there. I might drift back into that. But this is like trading corn. Damn, Swiss franc. And the crazy, insane pound New Zealand insanity pip range. We're getting filled right now by limits. This would probably be, man, this thing it's just insane. But definitely you have to think about buying here and putting more buy limits below. So I'd start getting long this thing for, oh, that's the monthly. But even the weekly, right? You can see the double top here correlates to the double top. There's a double top here, and if you go to the weekly to see that double top, you got to come. Well, here's a top too. This is a big popular price here. What is that? 206, some mind-blowing price. For the long term, it's definitely a buy there. But always for the scalp, for me, I would put buy limits on this thing. I don't know if it buys stop on the daily. If you look at the daily, you're a really high risk trader, you put your buy stop up in there. But no, I put buy limits on, retested that bottom next week, and just buy limits all the way down, because you're starting to get into the fair or the breakout point. Last known breakout point. But you could cut all the way back to here. You know, these things totally overshoot the runway on pullbacks. You come back into this internal top, you could come all the way down there. So if you're prepared for that amount of heat, but this thing is, you have to trade super wide. It's very expensive, brutal spreads. Here's the trend line to break. If you're bullish, this is going to take quite a bit of time. It could happen this year. Got 3 touches. You're coming into the, I'm going to load up before we break that trend line, and I would say buy limits on the edge of that wick next week all the way down to that line. So you're willing to buy quite a bit of like 300 pip range. There's some insane, mind-blowing amount of pips, but that's crazy. You know, you really have to have some money to trade that. There's the good old dollar CAD. This is the this guy. This is the classic euro dollar. You're always buying here at fair value. Overshot the runway a little bit, but that's where I went long. Here is the New Zealand dollar and the guppy. The guppy's coming back up. You got to cover here. You got to get out if you're long. I would wait till, I say Wednesday. I would get out of these things on Wednesday if you can hang that long. Of course, this looks like it even gap open on the tomorrow night. Like this thing's just gonna rip, just go ripping. This low is not gonna hold on the daily. I don't think. They're just gonna maybe pause there, but then forget about it. All right, you already broke this trend line in. Daily people are already long. Breakout, pullback, find support. Classic setup. You know, that's just as good as it gets. Although not on the wicks, you know. Would have never worked out. If you did that on the wicks, there's no pullback, retest. No. So I've tested a lot. I've looked at a lot of that, and I must say that momentum wins every time. That's why people trade RSI, and they trade all that stuff. I suppose your harmonica patterns are built on that. Look at this. Here's another top, breakout, pull back, failed retest. Great on the wick there. They punched through. Another. As it starts to narrow and wedge out, hopefully you know you patent the word wedge. I don't know, did I hit all these things? Yeah, crude. Along that. I think that's about it. So, yeah, I mean, it's going to be something next week. Man, crazy. But we've definitely put in a serious swing move. And this, I do still think this is just going to be the unbelievable. People will be talking about New Zealand in about 3 years, I think, saying stuff like, yeah, remember when you could go, yeah, you know what? When people start moving to New Zealand, you know, supply and demand, price is going to go up. That's my only fundamental assessment of these markets, is just what I would do and what it looks like people do about this New Zealand. In fact, if you take the biggest picture I can get, I don't know how far back the data really goes here, but man, look at this channel. Insane. That could be just the most, you know, just marching north like a stock market. It could be like that. Okay, so that's a weekly update. I guess that's, hopefully I hit all these currency pairs, and I don't know if these are the best ones to trade. It just happened to, this is not that many. I got crude oil here. I don't know what the hell, you know, these, I'm missing probably some. Like, why wouldn't you look at the, yeah, you know, New Zealand to the euro? Let me tell you something. If I put that up here next week, it looks like pound New Zealand, anything against New Zealand, anything against the new kid on the block, and the edge of the liquidity of all of Forex, or the 7 majors, New Zealand's always just rambunctious. Major risk per pip. So I'm just trading the euro dollar, and that's it. You know, trendline breaks. You know, breakout, pullback. Look at that retest though. Oof. But you have to reload all those tickets again. So if you were long on that thing and you moved your stop to break even, that's a classic example why you would never want to move to break even, except the fact that you're a scalper. You should have taken something off, even if it was 20%. But I'm just saying that, to me, I'm not being able to take the psychological punishment of, I got on this triangle breakout and it went up, and I didn't get out, and the news came out and they stopped back to this flat spot doji. If your buy limits were there at that confluence point, which is still valid, and it'll still be valid next week, so will this top here. So my buy limits would be like this going into next week. Bottom becomes a top, breaks up, pulls back. 4-hour chart, right? This is your channel you're currently in. That's why this wick is about volatility. It's not about time. If you didn't see that wick and you printed out that chart, you'd say, oh, trading is so easy. Oh my God. You mean I just buy pullbacks? Yeah, that's right. You buy pullbacks. Oh God, I bought here just like you said. But I didn't have like a lot of money, so I put my stop here. Oh, you did? Yeah. Oh boy. And then you watched it go up here to your target, which is the last known low on the 4-hour. And that's why trading's painful, because this stuff looks wonderful when you smooth it out with a moving average. And even on 1 period moving average is really a smoothing, believe it or not. And there's the breakout top, becomes the bottom, and all those wicks get crushed. You fill this void, but there's always the kickback. Almost got to refill that void again. Then it's up. Now, I'm looking for a slight pullback to here. Any pullbacks I'm buying now, but I also got the sell limits pending next week up in here. And you trade both directions. the volatility tells you what style order to place, and lack of volatility also tell you to get in on stops on low volatility, get in on limits on high volatility days. Just pepper your limits wider, and that's the only way I can approach these things, because I can't tell. I mean, they could bid this up Sunday night and trap all the bulls here, and this would be the backlash trade, is to get in, sell limits up here, capture, comes back to here. This is the whole trade, that it rallies up in there, takes this out, comes back, pulls back. Or you're like, oh, you know what, I'll wait. It may actually crush all the way back down to here. I've seen that before. This is for a chart. Then it goes to here, and this is the trade now. Adapt to current conditions, and it would make sense because it conflues with this retest of that trend. So this thing can do anything coming in next week on the euro, and I'm going to be prepared in such a, this is a 10 pip grid, so the hand placed order is certainly at this. That's the obvious retest, but then, you know, so that's all I can think of, and the rest of it's just about being able to, and this is even difficult here because these are like this is like a 16-hour move. You know, I'm definitely getting out. If I'm a 4-hour chart, when I bought this breakout, I'm getting out of everything right there. I went flat there, and you reload here. You reload when it gets quiet. But if you didn't get out here, and I got out of everything just before the news came out, and I only bought a little bit here on this pullback, because unless you had that planned out ahead of time, you didn't care what the news was. If you had stops here and all your buy limits were peppered here with a master stop here, it's a high leverage point. Explosion, launching pad. Same thing here, buy limits in the 4-hour, comes back, your stops are here. That's not a great trade, but, you know, high probability. Double top, comes back, so here, 109, 109 something, 109.70 I'm buying. This whole area. Sunday night, can't wait. So the market's closed, and that's my my weekly update. And what am I going to do? I guess it's the of course, yeah, just so you know, the next week's going to be a little choppy, right? Because that was quite the, man, when you get these swing moves on the weekly, that once you have a hammer on a monthly or weekly, you're almost guaranteed that you have reached, especially a doji, you're right in confusion mode. So next week, like I said, Sunday night, if this thing's gap opens, I'm already out. I'd reassess on a 4-hour chart, but hell, I'm getting out of all my winners, and some of those I would let drift. Of course, this is always psychological. Can you handle the equity swing on the way to your target? I can't, or I know, since I'm always watching this thing on an hourly or 4-hour basis, I can almost say I can go flat right now and re-enter from long or short and just start over. You're just starting over. My friend who was trading demos back in the day, he said, well, hell, you know, your assessment of how much money you're making and stuff like that, you know, it distorts your view, right? It distorts your view of what you're currently in. And some of this stuff, even if you're slightly up on a trade, but you know structurally this is the place to get out, I get out. I'm not going to, I don't want to make the amount of money I'm trading relevant to my decision, although it's hard to not put that in there. So if you're trading without stops and the whole demo account's swinging up and you haven't blown it up yet, you can make a tremendous amount of money. You can survive those kind of high volatility moves, even though Once it's all said and done and all the auctioneers have had their fun and they've cleared, they've found liquidity zones to fill and then retrace into, yeah, maybe by the end of the week, if you haven't got stopped out or blown the account up, you can pretty much bank that account. Then you can go back to trading like smaller, and you're just building on, you kind of like put that account into, instead of risking 20% with $1,000 in it, now you're risking 3% with $10,000 in there. And then that account can go into a cruise control mode. You don't have to get carried away, because worst case scenario, if you have an expense that comes up, you can draw on that account. But you have to make it through that threshold of just getting that thing off to college, right? If it goes off and starts going on a serial kill, if you're a 20-year-old, 25-year-old kid turns into a heroin addict at the age of 25, then you've done the best you could do, right? You sent him to the finest schools in town, and now he's on the streets. But you have to let go. You cannot invite him to live with you and deal heroin out of the house. Typically, it's not a good choice. But a lot of people are too heartfelt and they can't let go. And I don't think I heard with this Whitney Houston kid still alive. Anyways, yeah, weekend update.